The concept of FIRE and the world of cryptocurrency. That's essentially what we're discussing. But let's begin with understanding what is FIRE. Well, it stands for Financial Independence and Retiring Early, a very popular concept in the finance world. It aims at extreme savings and investment so that you can retire earlier. But now we'll understand the concept of FIRE in the world of crypto. What does it do? And what it should do? First, it should generate passive income from crypto. Second, if you're using FIRE, you should be able to use crypto as a financial instrument to save, to increase your savings and to probably rely on it a bit. And lastly, investing in digital coins over the long term. This is very crucial. Anyway, a lot of experts have been pointing out that you should invest for longer periods to actually get the entire benefit of it. So that's what is actually FIRE can do in the long term. In the end, what to consider while adding crypto to your retirement plan? See, if you don't have sufficient retirement savings built up already, be very cautious. And considering regulation being in the gray area, especially in our country, you have to diversify your portfolio. You can't dedicate all of it to crypto. And also be aware of issues such as hacking, malware, and phishing attacks. And do not forget to factor in your age, disposable income, and risk appetite. But there are a few crypto tools that you can actually use to play with the FIRE. One is mining, then there's staking, and there's definitely buying and hodling as well. So that's essentially FIRE and the world of cryptocurrency. And now we have our guests also on the show, and we'll be discussing this concept. We have with us Malik Kotadia, co-founder and chairman of Innovation Labs, and we have with us Rohas Nagpal. He's the chief blockchain architect, hybrid finance blockchain, that's HiFi. A very warm welcome to both of you. Rohas, I want to begin with you. Would you recommend FIRE to a crypto investor?
Definitely I would, and I think you can use crypto to achieve FIRE, but you have to keep certain things in your mind.
Okay.
I believe it is more important to look at the utility coins and tokenized assets and not at cryptocurrencies. So it is better to go for the utility or tokenized. Secondly, do not buy and forget. You have to keep monitoring. So whereas in the world of stocks, you usually wait for quarterly results, in crypto, you have to keep a very active view of what is happening to your portfolio, and I would recommend on a daily basis. I totally do not believe in the concept of hodling, where you just buy and then hold it for a very long time.
Okay.
Very, very bad move to make. And don't believe in buying the dip. Like every time the price goes down, buy more, not at all. So you need to be very rational and logical about how you go about it, but I think crypto can help you to achieve FIRE.
Okay, and Mr. Kotadia, how much percentage of crypto you think one should have in the overall portfolio if someone is aiming to have good retirement plan?
So firstly, I agree with Rohas that, crypto by itself cannot and should not be a part of your, or the only part of your FIRE or early retirement plan. As far as what percentage should be, it really is a function of one, your risk appetite, two, your age and your earning potential.
Sure.
And three, how scientific and how disciplined are you in your investment approach, as Rohas said. So it's not something where, you go with what everybody is saying or you go with the hype. It has to be part of your strategic investment and retirement plan. So for someone, this should be, or this could be no more than 1 to 2%. For some, this could be 5%. For some, this could be 10%. There really is no one-size-fits-all answer on this one.
Sure. And Rohas, can you hedge against crypto volatility?
Yeah, actually you can. So I in fact strongly believe that instead of picking the very successful projects out there, go with pre-listed cryptos.
Okay.
So they are not yet listed. You can usually get them at a very low price. And if you follow the method of, you look at the revenue model, the organization behind it, the history, the tech stack, and the social community. When you analyze all this and then go for pre-listed, I think that's a much easier bet, because there we don't see much of a downfall. We basically are going to see a lot of upswing. So I would say that is one very good way of starting out.
And is there any specific way, Mr. Kotadia, that you would recommend? Of course, we're talking about some tools which can help one achieve the FIRE goals. Would you recommend a few ways or tools?
Sure. As I said, I believe in a strategic and scientific approach. So there is a 5V model that I usually suggest to people and I follow. The first is, what is the value proposition of that particular platform, whether it is an existing leading platform like Bitcoin or Ether or one of these upcoming platforms. You have to be very clear and understand the value proposition. Secondly, also understand the valuation. It's not enough that it has a strong value proposition. The price has to be right. Third V is velocity of growth and what is the network effect. Is it growing fast? Is there a very strong exit barrier network effect? The fourth, as Rohas also mentioned, is viability of the platform, the tech stack, the robustness of the platform. We see even leading platforms having downtimes, or we see a lot of these concerns around the Ethereum merge. So you have to really understand what is the viability of the tech stack. And the fifth way I would say is the value, volume, and variety of usage. How many DApps are there? What kind of DApps are there? Are they all only gaming ones? Are they a mix of DeFi, gaming, and NFTs, etc.? What is the future scope, etc.? So as long as you have your own method built around these 5 Vs and you diligently and strictly follow it, I think you should be okay.
Rohas, lastly, is it a good idea to have FIRE expectations from crypto?
Yeah, I think it's fair enough. You can have that expectation, but it has to be reasonable. I mean, you cannot say that I will buy 100 rupees of Bitcoin and I will retire. That's not going to happen. That only looks good in some ads. So as long as you are patient, you are reasonable, you are not doing day trading, you're watching all the sectoral indexes, the fear and greed index. And if you have a good understanding of the different crypto metrics, there are more than 50 of them, and you understand DeFi in detail, I think you can expect to.
But Rohas, you say stay away from day trading and also stay away from hodling. So what is
so you have to monitor on a daily basis.
Okay.
But that doesn't mean that I will sell 5 times a day just because there is a 1% rise or a 5% rise. I will buy it and then I will monitor if some major negative news comes. Like suppose there is a major attack or a hack attack on my particular portfolio on those tokens in that, I should immediately be ready to sell. But it's not I'm a day trader, but I'm just monitoring on a daily basis.
Last 30 seconds, Rohas, since it's an Independence Day special episode, how would you explain or define financial independence? What does it mean for you?
Sure. So for me, financial independence is I work because I want to work, not because I have to work for the money. So if I can continue with my current standard of living without necessarily having to work for me, that would be financial independence.
Mr. Kotaria, 10 seconds. Please explain, like, what does it mean to you?
I think I completely agree with Rohas. I couldn't have said it better. As long as you don't have to work to earn, but because you love what you are doing, then that is definitely a question of financial independence. And of course, there's also the other part of early retirement, but that we can, that is very subjective.
Sure. Thank you so very much, gentlemen, for talking to us.